Welcome to episode number 220 of AAA Weekly Knowledge Series. Today we have taken a subject which is very, very recent, and it actually is regarding notification of all forms under IBC through circulars issued by IBBI. So there has been a structural change in the forms. Earlier, the forms which actually come from IBBI, from our regulator, that was a part of the regulations. So all the regulations like CIRP regulation, liquidation regulations, or the even personal guarantors regulation, every regulation was having a forms attached to this. So there is a process of making modification in the regulations. There is a process of first of all issuing a discussion paper, then the feedback, and then finally making a final amendment in the regulation. Whereas the forms are in fact very important to cure certain defects in the processes. So therefore, it was thought by the lawmakers that the forms can be shifted to circulars. So there are, in case any change is required in the forms, that can be issued by IBBI without this process of discussion paper and then feedback and then final regulation notification. So therefore, we have kind of structured in today's episode that first of all we will touch base the new forms added in the CIRP regulations, and then the new forms added in the liquidation regulations, and then we will also see the substantial changes made in forms, and then we will just say that these are the forms which are not changed at all. However, the structural change is already there, means the shifting from the regulations to circulars, that has happened.
To add to what you are saying, it is very, very important to review these changes from two perspectives. One, from the practice perspective of insolvency professionals as a RP, IRP, RP, or the liquidator, because there is, some of the changes in the forms are so substantial that it also changes eventually the kind of effort and the kind of diligence that is required by the insolvency professionals. It also has an implication which is legal in nature, because many applications which are required to be filed before the adjudicating authority are now required to have support of some of the forms that are required to be taken care of. So therefore, if the form is complete, the form is clear, then the litigation will also be that effective. So therefore, it becomes important to review these forms from understanding them, understanding their implication on practice, and also the litigation that is involved in all our cases.
So, Ankit, can I ask you that can you touch upon the forms which are absolutely new in CIRP process? Because it is very important for all the viewers to understand which are the new forms introduced in CIRP regulations.
So, yes, entirely new forms that we have is Form AC. Now, Form AC is an entirely new form. It kind of expands Regulation 3A. Regulation 3A gets its powers from Section 19 of the Code. There was no regulation prior to this form, or no form which used to kind of say that a report a template with respect to handing over of custody. So we had devised our own methodology in our entity based on our past experience, but many practices differed. So what Section 19 says? Section 19 says that the erstwhile management shall give the custody and control to the RP on his appointment during CIRP. And that is where the question was, and then it says that in case this control and custody is not given, then the RP will take over custody and control on his own and document what he has received. So there was no form to it. So now there is a Form AC to it, and I think we can maybe after some time discuss more about that.
I think we can discuss about this form because this is a new form.
So this form, if you want to discuss about it, has three parts to it. This form first has stipulated columns for recording the information relating to assets, finances, and operations. That is all recorded there. Then in part B, it has assets recorded in balance sheet with book value encumbrance details and handover status. Then it says assets records not handed over with reasons and present location. It requires the signatures of the persons handing over, IRP, RP, and at least 2 witnesses. So this is how this form has been designed. So we have gone through this form. We already prepared it for one of the cases, which was a fresh CIP case, and we understood that the items that can be mentioned here in terms of the physical assets that are taken custody of and the books of accounts and other financial records that can be taken care of is something that this form entirely captures. It says what has been taken custody of, what has not been taken custody of, and then of course the RP now will have to conduct a process where he will fill up this form, share it with the erstwhile management, ask the erstwhile management to sign it in case they are handing over something. So the erstwhile management will have to sign and say that no, I have not given these 10 things to the RP. So that is something that then can be used for the purpose of filing an application under section 19.2, which will give more clarity. Because the most prominent difficulty in 19.2 applications was lack of clarity, because the RP used to say, I have not got this information. The corporate debtor management used to say, we have already given this information. So now that this clarity comes out, then it will create a better ecosystem for the information sharing part.
So, but Ankit, this is not a simply form. This is a process. So, this form, in fact, reflects a complete process how to take the custody and control of the corporate data. Now, let us see the form, in fact, is divided into two parts. One is records and the other is assets. Records and assets are two separate the parts of the form. So what all records are available with the corporate debtor and what all assets are available with the corporate debtor, and there is a list, although that list is just an illustration, but that list can be expanded. Now, if you understand, this form actually can run into pages and pages. Because in case you try to see how many records are being maintained by the corporate debtor, that all has to be listed, and whatever all assets, maybe this form will have a lot of annexures, lists. So this form itself will be a kind of Bible of the company, records as well as assets. And then in the third part, it actually will say that this is what has been handed over, means the item 1, 2, 3 has been handed over, the asset 3, 4, 5 has been handed over, and the rest is not handed over. Reasons has to be mentioned. So this is a complete change in section 19. Although we have already discussed that section 19 is now much expanded, it is now extended. All those personals who were working with the company, who were directors of the company. So this also takes care of that situation that sensing the insolvency, the main promoters, they exit from the company. So that also is taken care of by this particular amendment. Now, even if you exit from the company, even if you jump out of the sinking ship, but still you would be liable to provide information and you would be liable to be imposed penalty in case you don't give this information. So this is the, in fact, this is not a form, this is a complete process, and this form actually can actually become a Bible for the corporate debtors records as well as assets and also the entire process.
So I think this of course creates a very strong record of what the RP asked. So also puts a lot of responsibility on the RP to ask whatever was required to be sought at the time of this handing over. In case there is an afterthought that no, this was also something that was required, and it was already part of financial statements, already part of public record, and one finds it later, then it will be, of course, the RP will be accountable to the extent to state that why it was missed out in the initial form and why there was another handing over process that was carried on for that process.
The respect of the section 19 subsection 2 application before NCLT, that will also increase. So far, the circles also understand, they also believe that this section 19 subsection 2 application is just to protect the RP. But it would not be. Now it would be a direct relationship between what has actually been handed over, what has not been handed over, and in case the promoter says that he has already given, then he will have to show the document, the signed document, in two witnesses. So the outcome of application by the RP or IRP under section 19 subsection 2 would be very high now. So Ankit, now I think we shift to
next new form. Next new form is GA. GA is again an entirely new form. It kind of talks about how the resolution plan can be submitted in two parts, two stages. So GA is basically allowing the resolution plan to be submitted in stages. So that is where this form comes into being. So because this has been validated and regularized in the regulations, so that's why this form has also been introduced. If we look at this form and want to talk about it briefly, then I will just say that it is an application for two-stage approval of resolution plan. It is addressed to the adjudicating authority, and then it talks about the details of the corporate debtor, it talks about the details of the SRA, talks about the details of the COC approval, talks about reasons for seeking two-stage approval, details of proposed manner of implementation of the plan. Then it encloses or requires documents to be enclosed, that is copy of the COC approved resolution plan, compliance certificate under 39(4), copy of minutes of COC meeting where the resolution plan was approved, where the two-stage process was approved, any other document, and so on. So then it of course requires the resolution professional to sign this form. So what we also understood from our discussion with IBBI was that IBBI is encouraging that wherever there is a dispute between stakeholders or creditors with respect to distribution and the resolution plan approval is getting delayed because of that reason, IBBI is of the opinion that resolution professionals should place this form and this procedure before the COC meeting and ask the stakeholders if they would want to do a two-stage process. And if they say yes, then this form can be submitted along with all these documents. An application can be filed with the adjudicating authority where the resolution plan can be approved and the distribution can be withheld for the resolution of disputes.
So wherever there are disputes which impacts the distribution, and those disputes can be regarding dissenting creditors, some disputes regarding the claim verification, some creditor is not satisfied with the verification of claim regarding security interest, and also consequently the distribution cannot be concluded because of these disputes. So the intent of the lawmakers is the resolution plan must be implemented. So therefore, divide the application in two parts, and therefore the entire process, how the application for approval of resolution plan in two parts can be submitted to NCLT, and what all preparation we have to do regarding the COC meeting, what has to be presented in the COC meeting. So all that is also a part of this form. So very important, because see, the major disputes and delay in approval of the resolution plan is regarding the distribution or entitlement out of the resolution plan proceeds. So that actually can be separately handled, although it is provided in the Act that NCLT will make this part also, will resolve this dispute also within 30 days from the implementation resolution plan. However, it might be delayed because of the capacity of the NCLT presently. But yes, the law provides once the resolution plan is implemented within 30 days, this dispute also has to be resolved. So I think there are only these two new forms. And now, Ankit, I think we can touch base with those forms where there are substantial changes.
So substantive amendment has happened in Form FA primarily because of the overall change in Section 12A. So because 12A earlier was worded very differently and it has been entirely replaced, Form FA now is an application format to the adjudicating authority where the resolution professional is signing the Form FA. We can quickly go through this form and understand that what are the changes there. So now it is titled Application for Withdrawal of Corporate Insolvency Resolution Process. It is addressed to the adjudicating authority. And then it is an application where the whole application is in the name of the RP, Insolvency Professional, who is then submitting this application. Then the RP is saying what date was the committee of COC meeting held, where what percentage of voting approved the 12A proposal. and then it talks about how the bank guarantee or demand draft is furnished as per regulation 30A along with the application, and then this is the format in which this application will be filed before the adjudicating authority, or this form will be filed and attached to the application. So this is how the 12A process has been culminated or rather finalized in this number.
So the other form where there are some changes, that is the form AA, which is used for the consent of the IRP or the RP. Either it can be under section 22, means the appointment of IRP, or it can be under section 27 regarding the replacement of RP. Now, one amendment which has happened is that in case the same IRP is continuing as RP, then no separate order from adjudicating authority is required. So therefore, the law this form is changed accordingly, that if it is the initial appointment or it is a replacement, so the form has actually only those changes and nothing else. But as a process, this one step, IRP to RP, no order of adjudicating authority is required. This is a very good amendment, and it will also save some time of CIR. So see like when we actually trying to discuss various other forms.
So AA, AB, BC, CA, all these other forms, there has been almost no change there, no change at all. This has only been moved to the circular part. And then of course there is an amendment in Form H which only takes care of the increased time that is now available to file the compliance certificate, which is required to be filed. So now it says 30 days because the code also now says 30 days, because 15 days was understood to be too less for the compliance to be checked for a resolution plan before filing it to the NCLT, before the NCLT.
So these are all the forms that with respect to the corporate insolvency resolution process. So 2 new forms and 3 substantial modifications, and all other forms it is only a structural changes like shifting from regulations to circulars. Now coming to the liquidation process regulations, which is a kind of mind-boggling change. And although it looks like that the liquidator is not required to submit preliminary report, not required to submit sales report, not required to submit asset memorandum, but then we are actually going to tell you the liquidator's responsibility actually has gone very high. One, that the number of the time period is reduced from 1 year to 180 days. The fees is reduced, but the workload, you would see, I have just given instructions to my liquidation team members that they actually have to start preparing for the progress reports. Coming see, we are just covering this progress report form, and you will see how big would be the progress report forms. So Ankit, I think you can open that progress report forms, and we actually will take at least 5 minutes to discuss with all our viewers the progress report submission, for which the date is likely to come on 15th July. We have to submit the progress reports in this form. Now look the format, look the total information which is supposed to be provided in this form.
So it's a very, very elaborate progress report. It starts with part A of serial number 2, talks about the appointment, tenure and cessation of the professionals during the quarter. So it talks about the date of engagement, name and qualification of the professional, the date of engagement, date of cessation, description of work with duration, and the fee which has been given to these professionals. So again, makes the liquidator very accountable, makes those professionals very accountable with respect to the work that they are doing. So in case a professional has been appointed, no result is coming out, one will have to look into the reasons for that non-performance. And if that is not quarter to quarter, the progress report continues to have a pendency against a professional, then the liquidator is the person who is supposed to get this work done from that professional. So it can be asked that why is he not getting it done. Then the liquidator's fee during that quarter is disclosed. It does not only have the details of the fee which is decided. It says name of the liquidator, fee due, fee received, and then other expenses incurred. So full details that how much is the liquidator's fee during that quarter. So full disclosure, and if it is due, and then how much is due is also going to the going as part of this progress report. Then it requires, in part C, it requires that you enclose in the annexure minutes of meetings of the committee. So in case you have had one meeting, you were supposed to do a meeting every 30 days as per the regulations, then you have to enclose the minutes of those meetings. Then asset memorandum you have to attach in case it is applicable. Sale reports, settlement of list of stakeholders, property remaining to be sold and realized, distribution made to stakeholders so far, distribution of unsold property. So all these you have to attach wherever they are applicable. Development in material litigations by or against the CD during the quarter is again part D. So you list the case number, court or authority, provision of law under which that provision or that litigation is going on, last status of the case, next date of hearing. So all that is required. Then filing and development of POFE transaction cases during the quarter. So we'll talk about case number, provision, amount involved, and last status of the case, next date of hearing, that needs to be added here. Changes, if any, in the estimated liquidation cost. So in case there was an estimate earlier and the revised estimate, so you talk about that. Then the liquidation account status, that what are the receipts, what are the payments that have been made. So this again will be unaudited for all the quarters, but audited for the year which has been ended. So the progress report for the year end, financial year end, will have the details or have these details as an audited statement. Data of cumulative LCD to date. So one data is how much is the receipt, how much is the payment for this quarter. Then there is another data that what is the total receipt and payment for the entire liquidation period so far. So there is accountability for the entire LCD process, also accountability for the quarter separately. Disclosure on material change and expected realization of an asset proposed to be sold is also something which is part of H. So one talks about particulars of the asset, details of material change with reason, audited accounts we have talked about. It then says any other relevant information, then the liquidator certifies it, and then of course he signs it off. So this is what this progress report now looks like, and it will add a lot of accountability on the liquidators and the stakeholders, because if the liquidator continues to file progress reports which say that the liquidator requires some support of stakeholders to close the liquidation process, even that I believe will now be part of this reporting.
So, in case we see this progress report each column wise, so it is a complete report of what work has been done by the liquidator in the last quarter. So this progress report will also go to adjudicating authority and it will also go to IBBI. Just a view of this progress report, it actually be very well clear that what the liquidator has done in this quarter. So this report would also be, for the purpose of transparency, it would also be going to the COC members. So the COC members will also know whether the liquidator is doing something or not. So therefore, the processes will fasten, the transparency will increase, the liquidation cost issues would not crop up because everything has to be approved first and then it will be part of the progress report. The minutes of the COC meetings are supposed to be part of this. The sales report are also supposed to be the part of this report, progress report. So therefore, every liquidator should now start it, and then like for each and every litigation you have to give the update, and there will be various annexures, there will be various, it's not a simple form. So therefore I think this is also one of the major introduction of form as far as this progress report is concerned. That is very well. So Ankit, I think we can take up now some of the new forms which are introduced in the liquidation process.
So Form G, which was the old Form G, was for claims submitted by other claimants. So all those claim forms starting from C all the way to G have now been omitted from the liquidation regulations, because as per the new process now, there is no system of filing those claims, and it is very well stated now that the forms that are part of the CRP can be used wherever a creditor wants to file an updated claim or file some updation in their claim in liquidation process. So what new Form G that has been introduced now is a totally different Form G from what it was earlier. Now it is an intimation of the decision of security interest. So because at the time of liquidation, initiation of liquidation, it is assumed now that the creditor must have filed their claim during CRP process, and that is the claim that will continue during the liquidation process. So when liquidation starts, the creditor will take a call on the decision on the security interest, whether he wants to relinquish or not the security interest. So that's where this form is. It is addressed to the name and address of the liquidator, Then it talks about the details of the secured creditor, talks about the details of security interest. Enclosures are mentioned. So it's an important part that security creation documents, SARFAESI, ROC charge ID, any other identification document for the charge, board resolution authorization, all that is enclosed now or listed as possible enclosures. And then, of course, with the designation and signatures, the creditor can communicate to the liquidator whether they are relinquishing the security interest or they are choosing to realize the security on their own under section 52(1)(b) of the code. So this is Form G.
Two more new forms are introduced, so we will not take much time in those two forms. One is the Form I and the other is Form J. So these two forms are related to, first of all, when we deposit any unclaimed dividend or unclaimed distribution in a liquidation process, then we submit all those in the liquidation in the liquidation corporate liquidation account CLA that we will go to and we deposit in IBBI. So this is one Form I and one Form J, and somebody wants to draw from that CLA corporate liquidation account, so he would use the Form J. So these are all new forms. There is one form that I would like to say that there is one form which is completely deleted, that is Form A, where we used to use, and wherever the stakeholders consultation committee minutes were supposed to be prepared, that was in form number A. Now that is completely deleted because the structure of stakeholders consultation committee is totally deleted from the law, and the COC minutes would be as we have been preparing in CIRP. So therefore this form was not required. So there are more forms under where some changes are there.
So substantial changes have happened in the written consent to act as a liquidator, that is Form AA. So there again, the how it was addressed to SSC, of course, has to change. Now it is addressed to the COC. The regulations are changed. The consultation committee references have been changed. So these are the changes there which are required for the for recording the change in the process itself. Then public announcement. Now the Form B has been retained, but Form B has been majorly overhauled because Form B earlier was asking everyone to file their claims. Now Form B in liquidation regulations has been changed to or addressed to from all stakeholders. It now calls out to those who did not file their claims in CRP or those who are updating their CRP claims as on insolvency commencement date. So that is where this change comes in.
See, while this is fine, but this Form H, in case we see, Ankit will take out the Form H from the like actual Form H. But what I would like to say, in case any liquidator will read row by row and the column by column the Form H, then the liquidator will understand what is expected out of him. He will understand what is expected by IBBI from him. This is the complete record of the liquidation process. So Ankit, can you just spend about 2 minutes on this, what all has to be filled in this Form H when we submit this for dissolution of the company or for closure of the liquidation process?
So the format itself is 5 pages. It starts with, of course, the details of the liquidation process, where one has to talk about the name of the corporate debtor, case number and NCLT bench, date of initiation of liquidation, date of appointment of liquidator, date of commencement of CRP, and all these details are captured here. I don't think I want to go through all these details. Date of constitution of the committee, meetings held, fair value, liquidation value, date of public notices for auction, date of order. So all the information that the adjudicating authority might want to look at when they are considering a dissolution application and wanting to ensure that liquidation compliances are complete are part of this. Date of permission of adjudicating authority for physical auction, private sale if there is a permission from adjudicating authority, details of intimation to statutory authorities as applicable. So when was the intimation done? So if somebody who is doing a liquidation process, I believe it becomes now important to kind of keep filling this form as part of your checklist and see that okay, this is done, this is done, this is done, this is done. If you've not done something, I think this is a good checklist now, because eventually if you're a liquidator and you will be filing for dissolution of the company, you will have to anyways fill up these dates and fill up these forms. So it is a good idea to do that today. Then details of the assets as per the asset memorandum and final sale report. So what were the asset, what was the mode of sale, estimated liquidation value, realization amount, and date of transfer to liquidation account. So all those have been there here. Then realization, that opening balance in the liquidation commencement date in the bank account, how much was the realization from auction of assets, from private sale of assets, from assignment of NRRA, from distribution of unsold assets, and then what is the source then distributed amounts, that how much was used for CRP cost, how much was used for liquidation cost, then how much was used for payment to other stakeholders along with the name of the stakeholder and the amount distributed to the amount claimed. So that is also something that is part of this report. Details of realization of security interest by secured creditor under section 52. So where they did not relinquish their security, what did they realize and how was that dealt with? NRRA, again, what was the NRRA? How was it sold? Then the liquidation process, whether it was conducted within timelines or not. So there's a full table which says that, okay, this was the timeline as per regulation 47. What was the actual timeline that was achieved? Then the non-compliances with respect to the circulars and IBC code, and why was there a deviation? What was the reason? How was it rectified? So self-disclosure with respect to compliance is being completed. Details of applications filed pending in respect of avoidance transactions is again something that was that is now part of this form. So this is how it then ends with the signatures of the liquidator, and it ends with a line that it says all undischarged or matters pending before any court or tribunal relating to corporate debtor, if any, have been reported to adjudicating authority. Now, when we read this as part of this compliance certificate, does it mean that if only litigation is pending, where the litigation is not required to be followed by the liquidator, it does not have a positive cost benefit for the liquidator to pursue, the liquidator can list it here and just file a dissolution application before the adjudicating authority by disclosing that these matters are pending?
For this is again, we actually have to corroborate with the regulations and with the act, because the act says that before the dissolution, the COC has to decide how the pending litigation will be pursued, and if there will be any realization out of that, how the same will be distributed. In case the COC decides about that who will pursue this litigation, and in case of any realization, then of course, yes, then we have to list out all these litigation.
So POFE, of course, can be pending, but other litigations where the company is simply a respondent, it does not want to pursue it, I believe those can be listed here in the compliance certificate, and one can file for dissolution now.
No, but then again, it has to be very clear that who will pursue. And in case there is no decision regarding who will pursue, it is not possible still to dissolve a company. That decision has to be taken. So this is not really possible that in case we still have litigations pending and we are able to close it, somebody has to take this responsibility. So this is all as far as this liquidation forms are concerned. There are some forms which are changed, and that is form C, D, E, F, G. All these forms are regarding claims. Now, in the liquidation process, earlier the claim form was quite detailed. Now the claim form only says that in case there is any change in the claim that you filed before in CIRP, or in case you have not filed your form during CIRP, then you can file it now. However, the forms are more or less same, and it refers to committee of creditors. And as far as these other parts are concerned, not much of change. Move on to some of the forms which are introduced in the personal guarantors insolvency resolution process or the bankruptcy processes. So there I would say that the first major amendment was that this because since the regulations are also now finally notified, so we have not touched upon this point. So the interim moratorium is completely deleted in section 96, because see, whenever in section 94 or 95 application used to be there, and as on the date of filing of the application, the interim moratorium was applicable, and the creditors were not able to take any step under any other law to enforce their security interest because of the moratorium. That's a big relief to all the banks and financial institutions. And the one form, Ankit, I think this is the one form which is introduced in this personal guarantors insolvencies Form B that is required to be submitted by the debtor. Now, in case we see that very like kind of detailed form where he's supposed to declare all his assets. Now, the assets are in fact subdivided into 12 categories, and it is supposed to be filled in these categories. And I would say the 12 categories are saying this has captured basically all kind of modern asset classes like cash and bank balances, business trusts, investments, including overseas investments, immovable property, retirement, provident fund, digital assets, intellectual property rights, valuable movables, agricultural assets, receivables, contingent claims, ESOPs, beneficial ownerships.
So this is not a form. It's actually Regulation 6A that we're talking about.
Yeah.
So 6A says it's restatement of assets, and it starts that for the purpose of sections 94 and 95, along with the application for initiation of insolvency process, this has to be shared along with the supporting evidence. So it is a big check on fraudulent and the current process that was going on was that everyone for the moratorium used to just file an application without any details of their assets.
Yes.
And after the appointment, even under section 99, the resolution professional used to struggle that there was no information available with the creditors or with the personal guarantor as to what are his assets. And so
the only thing that Ankit, I want to say, like if the creditor is filing this application under section 94, then how the creditor will have all this information?
So it says, in case you look at the proviso, it says that provided that for the purpose of the application under section 95, the creditor shall file information relating to the assets of the individual to the extent available with the creditor. So that proviso takes care of the 95 and all.
So that means that in case we talk about section 94, which is an application by the debtor himself, then all this is applicable to a fullest extent, but as far as section 95, which is applicable to creditors, to the extent
information
possible
available with them.
So
in case
now
they have a net worth statement, and that will be something that the creditors can kind of attach and see that is what they know.
So section 94 application, which was in fact being misused, that actually would be completely cured with this amendment.
So interestingly, it has details with respect to the ownership or the receivables contingent assets also. Then I think ownership interest is also something which is a very interesting one. In case you look at clause L, which is ESOPs and beneficial ownership interest, it says employee stock options, whether vested or not, securities or assets held through nominees, and any beneficial interest in any entity, trust or arrangement. So it takes care of the problem that if there is any individual who has some beneficial interest in a trust or in an HUF or in other entities, then that also becomes a disclosure requirement here.
And I believe the HUF also would be covered.
Yes, very much.
Any beneficial interest in HUF would also be covered.
So yeah, HUF is very much covered in my opinion, although it is not covered in business interest in commercial assets, because there it talks about ownership, whether sole or joint, in a proprietorship, partnership, LLP, company. But yes, beneficial interest in the HUF will be covered under clause L in my opinion.
So the similar amendment is seen in the bankruptcy regulations also, where the forms are shifted structurally from the regulations to circulars. And again, the major amendment in bankruptcy is the deletion of interim moratorium on application filing. And also, again, I think this by providing the details of all the assets is also important, because see this the consequential amendments, because the personal assets of a grantor actually can be combined with the corporate insolvency resolution process of the corporate debtor. So there are some changes regarding that. But Ankit, there is some major change in the voluntary liquidation also. Can you take up that? I think this is new regulation 42. This termination of voluntary liquidation proceedings.
So what is new is new regulation that has been inserted is 28A. So it talks about the possibility of submission of an updated claim. So this anomaly that the claim cannot be updated has been regularized here. Then of course the entire verification admission has been taken care of in 29. Then there is a new regulation that was added with respect to termination of the voluntary liquidation. So there is a form now which talks about how the application for termination of voluntary liquidation can also be kind of closed and how that process will run. So these are the three things that are, of course, part of the changes in voluntary liquidation.
And the new regulation 42 also would like, because that's also regarding the
That's
termination.
with respect to the termination
Of liquidation
and
proceedings.
the exit mechanism for voluntary liquidation, because many voluntary liquidation started, but in case there was a hiccup in completion of the process, then there was no way of going back. That is what has been provided now.
In today's episode, we have covered most of the forms which are structurally shifted from regulations to the circulars. So now, technically, the forms are only available either in rules or in circulars. So there is no forms which are now a part of the regulations. So we have covered most of the important forms today, and with the forms that we have discussed today, our series on the IBC Amendment Act and the discussion papers and the final regulations and the final forms. It is all completed. So now we will only come back and discuss about the Amendment Act 2026 when the regulations for CIIRP, Creditors Initiated Insolvency Resolution Process, along with the notification from Ministry of Corporate Affairs regarding the applicability to such kind of what kind of corporate debtors and to what kind of creditors. So whenever this would be notified, we will touch base with this. Otherwise, we will finally come with you different kind of subjects which are the need. Also, I would say that while you are viewing our video, you can actually provide us your needs or any subject that you want us to work hard on that, and you provide a comment, and we will try to cover up all those issues in our future episodes. Thank you very much. It is our way of learning always.
Thank you.